Hey, welcome back. It's JWalter here. Last week, I shared several housing market predictions for 2022. I made my own housing market prediction, but I also shared what Zillow had to say, as well as Realtor.com and Redfin. If you missed those videos, I'll leave a link below for you. However, I noticed that Zillow updated their housing market predictions for 2022 just a couple of days ago. So in today's video, I'm going to be sharing Zillow's revised housing market predictions for 2022. I'm going to discuss their latest predictions and what we should expect next year. So if you're just curious about what their prediction is, or if you're thinking about buying or selling a house in next year, then this video is for you. And before we get started, if you want a real estate agent referral from virtually anywhere in the US, then go to homeandmoney.com/Jason to get connected with a great real estate agent in your neck of the woods. With that said, let's begin today's video. So Zillow is forecasting that existing home sales in the US will end the year up strongly from 2020, and they will continue to increase through 2022. They also are predicting that home prices are likely to peak and then plateau in the early months of 2022 before slowing somewhat through the end of next year. In this latest report, they believe that home prices will end the year with a 19.4% increase from 2020. Zillow is predicting that home values are going to increase by 3.7% in the 3-month period from November of this year to February of next year. When reading this revised report from Zillow, what's most eye-opening to me is that Zillow is even more bullish on their housing market predictions for next year than they were last month. So for example, they stated the following: over the longer term, our expectations for home value growth has risen. We expect home values to grow 14.3% over the 12 months ending November 2022. And that's up 13.6% over the 12 months ending October 2022 that we projected last month. The robust long-term outlook is driven by our expectations for tight market conditions to persist, with demand for housing exceeding the supply of available houses. In regards to housing inventory, here's the latest from Redfin, and they're saying that housing inventory for 400 plus US metros is currently sitting at an all-time low. That's down 25% from 1 year ago and 43% from 2019. And here's a really good graphic on Redfin's website to kind of show you this about how low housing inventory is right now. So the gray line at the top represents 2019. And as you can see, there were 977,000 houses for sale in mid-December at that time. In 2020, it dropped by 240,000. In 2021, it dropped to a mere 555,000 houses for sale in the US, at least for the 400 plus US metros. And because there's a lack of houses for sale right now, houses on average in the US are selling for more than the seller's asking price. Every market's different, right? But on average, sellers are getting more than their asking price. And also, houses are selling very quickly as well. So in other words, Zillow believes this is not going to change, or at least housing inventory is not going to increase greatly, and this is going to cause home prices to increase further. The reality is it's very hard to predict how many people are going to list their houses for sale next year. It's really anyone's guess. So for example, if mortgage rates do increase greatly next year, that could cool off home buyer demand, and that would cause inventory to increase as well. In my opinion, the biggest factor at play about what will happen to our housing market next year is how mortgage interest rates change next year. So far, since the Fed's announcement from Wednesday from a couple of days ago, the yield on the 10-year US Treasury note has decreased, and that's tied loosely to mortgage interest rates. So a decrease in that yield could cause mortgage rates to decrease. In addition, the average 30-year fixed-rate mortgage has more or less been flat over the past couple of days. I'll discuss more of this later in the video today, but a lot could change in next year, so I'll keep you updated regarding all of this. Okay, so going back to Zillow's forecast for 2022, in regards to home sales, they expect 6.13 million existing home sales to close out 2021 on a seasonally adjusted annual rate. That's up 8.6% from 2020 and also up slightly from the previous forecast of 6.12 million sales this year. Analyzed existing home sales volume rose to 6.34 million in October, and that was up 0.8% from September, which was unexpectedly strong. This better than expected showing is the main contributor to the upward revision in Zillow's near-term outlook for the series. Sales are expected to continue growing in 2022, forecasted to finish next year with more than 6.5 million closed existing home sales, and that would be up 6.5% from 2021. Here's a really good graphic to show how their forecast from last month compares to this month going into 2022. Their dotted vertical line is the beginning of their forecast. In November, they were predicting home sales on an annualized basis to dip for the first half of 2022 and then to pick up in the last half of the year. But have a look at the revised numbers from December. They are much more bullish on their number of home sales, especially in the first few months of 2022. For the last half of 2022, it shows it's going to flatten out, but still increase at a much, much slower pace. And just like their previous housing market forecasts, they added a disclaimer. They said downside risks to our forecast remain. The expiration of mortgage forbearance programs adds uncertainty to the outlook for sale inventory, and elevated inflation heightens the risk of near-term monetary policy tightening, which would result in higher mortgage rates and weigh on housing demand. All right, let's first talk about the winding down of the mortgage forbearance program and what impacts that could have on our housing inventory. I noticed today that Black Knight reported that 125,000 homeowners have ended their forbearance program over the last month, and that's a decrease of 12%. The total number of loans in forbearance has now dropped to 890,000, which represents 1.7% of all U.S. mortgage loans. And according to Black Knight, the next round of expirations will occur in early January, with nearly 200,000 plans scheduled for extension or removal. Nearly half of those are expected to reach their final plan expirations, meaning they will end their forbearance. For these homeowners who are ending their forbearances, obviously it's uncertain about what they will decide to do. But if history repeats itself, the vast majority will opt to do a loan deferral or a partial claim. For instance, the Mortgage Bankers Association's latest update reported that out of all the people who have ended their plans so far, at least through October 31st of this year, 29% did a loan deferral or a partial claim, 20% still made their mortgage payments even though they didn't have to, and 16.7% ended but without a plan in place yet. What will happen to those folks is uncertain at this time. In addition, 13.4% did a loan modification, 12% paid off all their missed mortgage payments already, and only 7% either sold their houses or refied their mortgages. Additionally, only 1.4% resulted in a repayment plan, short sale, or deed in lieu of foreclosure. So in other words, if history does repeat itself, then the vast majority of these people ending their forbearances will opt to do a loan deferral and not sell their houses. As we all know, though, history does not always repeat itself, so I'll definitely keep you posted with new updates regarding this. In regards to the risk of rising inflation, and the Fed more recently deciding that inflation appears to be more long-term risk and not transitory, it's very possible that mortgage rates could increase next year. So for example, most experts are predicting that mortgage interest rates are going to rise in the mid to upper threes next year. This is because the Fed is winding down their purchases of mortgage-backed securities, and they just announced on Wednesday that they plan to expedite that process. If you missed my update regarding that, I'll leave a link below for you. Originally, their taper of mortgage-backed security purchases was set to expire in June, but based on the Fed's announcement from Wednesday, that will now end in March, unless their economic forecasts change over the next few months. This, along with 3 potential rate hikes of the federal funds rate, could cause mortgage interest rates to increase next year. But please keep in mind, mortgage interest rates are not tied directly to the federal funds rate. Therefore, an increase to the federal funds rate doesn't necessarily guarantee that mortgage interest rates are also going to increase. In addition, in my opinion, I think there's going to be a lot of confusion about these 3 potential rate hikes next year by the Fed. The Fed is forecasting for 3 potential rate hikes in 2022. The key word, though, is forecasting and not guaranteeing. This is because the number of rate hikes they do next year is entirely dependent on the fact if their economic forecasts that they have right now end up being correct for next year. If the economic data in the next coming months for the US economy falters, then this could change their plans about doing rate hikes next year. In my opinion, the Fed's forecast for inflation to drop to 2.6%, which is about half our current rate, is far too ambitious. In my opinion, and I could be absolutely wrong regarding this, but I believe that inflation is going to be a more long-term problem and not something we can fix in 1 year. Therefore, because I believe that the Fed's forecasts are a little bit too ambitious, I would not be surprised at all if the federal funds rate only increased once or twice in 2022 and not 3 times. But what do you guys think about all this? And what do you think about Zillow's housing market predictions for 2022? Do you believe they're too bullish? Comment below. Also, if you got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. And also consider subscribing if you haven't done so already. Hope you have an awesome day. Look forward to seeing you on the next video.